So you may say, well, Dylan, this is all fine and good, but how in the heck am I going to pay off my home? My mortgage balance is $250,000, $200,000, $150,000. It's a ton of money. You're right, it is a ton of money, but how can we go about doing this? Well, first of all, be out of debt. And why is that such a big deal? And I know I keep saying in every video you need to be out of debt to do something. Well, be out of debt because the less payments that you have on debt and crap, the more payment you can make on your home to pay off your home early or quicker than you thought, or all these different types of things. You can pay off your home in a quicker fashion by not having debt payments. Also, having an emergency fund, because when you have an emergency fund, what you have is the ability to take care of things in cash on purpose up front. Because if you didn't have an emergency fund, and let's say every month you put $400 extra on your home, and that's the only discretionary income you were really dealing with, maybe your budget's a little, tighter in that way. Well, you're putting, let's say, $400 extra a month on your home, and then let's say a $500 expense pops up and you don't have an emergency fund or a proper one, then it's very likely that you're not going to be able to pay down on your home as quickly. So having an emergency fund is huge. And it also allows you to pay for things on the home, pay for things that are wrong with the home or that go wrong within your home that you don't have to worry about as much, and you don't have to worry about that taking away from the money you actually use to pay your home off. And then you also should be working to invest for the future. And you may say, well, how is this going to help me pay my home off early? Well, it helps you to budget. It helps you to put your money in a place that is actually going to grow better for you over the long term. And it's going to show that you have money that's off limits for helping to pay off your home. Because we don't want us to get to this place where we buy a home and then just be gung-ho on the home and not invest anything in appreciating assets or assets that are creating incomes or things like that. We want to be doing both simultaneously, because those assets are going to cause you to have a higher rate of return. It's going to grow and compound your money faster than paying off your home will. We don't want to get so caught up in paying off our home over the long term that we're just slugging along trying to pay off a home and losing this opportunity to grow our money over the long term. We want to be doing that, but we also want to be paying off the home. We want to be doing those simultaneously. And so having that money already budgeted and already there will allow you to know, okay, that money's off limits. I'm not going to pay off my home with that. I'm going to have to find other discretionary monies in the budget. And then once you get to this point, then you can see how much should you actually put on your home. Well, what do I think you should put on your home? As much over that investing as possible. And I've said before, be investing at least 15% of your income. So whatever percent of your income you are investing, anything past that that you still have in your budget, I would be throwing that at the house. But like I said, don't invest only and not pay extra, because that can be detrimental. And make sure that you're budgeting this, because if you fail to budget it, what will happen is you'll end up getting in a real tight spot, because you may think you can throw more at the house than you actually can. You may think that you can invest more than you actually can, and things can get out of whack. Make sure you're writing it down, budgeting this out. Also, if you're not going to write down or budget out that you're going to put extra on the home, you won't do it. You will not do things that you don't write down or make a plan about. And so make sure that you actually make that plan. You put that down on paper or on a spreadsheet or whatever and say, that's how much I'm going to put on the home. Otherwise, you'll end up not putting that on your home. And then obviously, I just want you to be paying as much as you can to move the needle of time, because you can get stuck in a mortgage for a long, long time. There are mortgages nowadays that they're giving out that are, they're introducing 40-year mortgages. That is crazy to have a 40-year mortgage. So we just want to move the needle. The sooner we can get that increase in discretionary income, because we don't have housing costs that we had previously, the better. And then let's just not forget that your house is expensive. Okay? Buying a home is expensive. Paying off a home is expensive. Okay? So not paying extra on your home is actually going to be more expensive. And you can go check out, I have a tool on my website on the Tools for You tab at www.mnowithdylan.com, and it's an amortization table and calculator that will allow you to look based on your different mortgage specifications. If you added a certain amount to your mortgage payment, how much quicker you could pay off your home, and you can find that out there. And you can also see how expensive it is to be paying that home off slower. And so you can see that there. So your home is a very expensive thing, and the interest on a home is the most interest you'll ever pay. And we want to minimize that, and the way you do that is by paying off the home early. And then we also want to get rid of our biggest expense as soon as possible, because that is your biggest expense. And it's your biggest cost for most of your life is housing costs. And so the quicker we can get rid of that, the quicker we can actually have money to do with what we want.